On Pearl Global, this company reported its fourth quarter results where revenues have risen by 7% and margins too have expanded and they've come in at 10.2% versus 9.5% that the company reported same time last year. Remember, the entire textile basket has seen some bit of impact when it comes to tariffs. But what's the outlook for the next year? To understand that in greater detail, we are now joined by the Managing Director of Pearl Global, Pallab Banerjee, who is now joining us. Mr. Banerjee, morning. Thank you so much for joining us. Shesha this side. First up, if you can take us through what the fourth quarter looked like for you. I understand that there have been some bit of tariff impact, but despite that, numbers look strong on a year-on-year basis. Will this sustain as we head into FY27?
Yeah, good morning. So far, it looks like things are good. In terms of the order books that we have for the next quarter, that's looking reasonably well. But the global situation at this point of time, there are always some surprises. So far, everything is going very well.
All right, so far things are going well. But along with that, Mr. Banerjee, help us understand that how is FY27 looking like? If you can help us with some numbers, because yes, the street has taken your quarter four earnings very positively. But the key question is that will this growth sustain in FY27? Any number that you have in mind?
Yes, what we are doing is our plan is to grow by 12 to 14% year on year. As a CAGR, definitely that's something is the goal that we have been working upon. We have built up the capacities accordingly. And if I look at my order books and the customer interaction, it's going on track in that path.
12 to 14% growth is what you're guiding for, Mr. Banerjee, but wanted your thoughts on the impact of tariff. Is that largely behind us? And are higher exports to other countries like Bangladesh more than compensating for the impact of tariff that you have faced in the last few quarters?
Yes, for India specifically, the tariff was very high. We had a 25% IEPA tariff that Trump administration had put on India. On top of it, there was a 25% penalty. So that was quite big for India, whereas rest of the countries like Bangladesh, Vietnam, Indonesia were working in the range of about 19 or 20% tariff. So that significantly impacted India. Most of the customers ask for some kind of discount. So they are the landed price, once they import the goods and pay the customs duty and tariff in US, the price should be comparable to the other countries. So for that, to do some business in India, it costed us some extra discounts. And that was levied on us since August end till about February, when this IEPA was declared as not legal by the Supreme Court. And yes, currently it is about 10% tariff, additional tariff over and above the MFN duties that every country is supposed to pay, or basically once the goods are imported into US, whoever is importing, that means the customers or the retailers or the brands, whoever is importing the goods, they have to pay that tariff. So yes, India was not sustainable or not feasible for these customers unless until somebody absorbed this difference. If you see for almost 30%, so that 50 versus the other countries of 20. So that something like was affecting us for these months, and we had to pay that amount of discounts. Now that every country is at 10%, so this problem is sorted out. Now I think USA is doing the the bilateral trade agreement with the countries. I think Bangladesh just got signed up. Other countries are also, I think, in the process of signing up. India, they have levied, I think, 18% reciprocal tariff once this bilateral trade agreement will be signed. So that's something we would see. As of now, this 10% additional tariff due to Section 122, I think that's valid till July end.
All right, so that's the take coming in on tariffs. But just wanted to understand that since the war is ongoing and the cotton prices, polyester yarn and other raw material prices and even freight costs have increased sharply, what sort of an impact are you already seeing on the business and how are you mitigating that? What are your plans regarding price hike or passing on to the customers?
Yeah. So this our industry normally works on, especially for US market. If I could give an example, it works on quarter. Yes, there are some business projection that is done, but the order contracts are signed every quarter. So that's how US places it. Japan would do it once in 6 months. European countries does it almost like every alternate month. So that's the kind of timeline that goes in. So any price increase of raw material or any fluctuation of currency, if that happens, so within a quarter that gets compensated. See, buyer also can see, it's like today it's a transparent world, so everybody can see what's the rate of raw material, what's the rate of the currency. So these two things always get factored in as we do the costing for the next quarter or the next season, depending on which market it is. Yes, if the raw material prices have gone up, then these are passed on to the customers within that period of time.
Understood. So that's as far as raw material pricing is concerned. But Mr. Banerjee also wanted to get the sense on demand, especially to export markets. Has there been any impact of West Asia crisis? Do you export to those geographies?
So not to the West Asian countries, we are not exporting much. But so far, what we are seeing is other markets like the US market, European market have been very resilient. And we have not seen any impact due to this war. Yes, what you just said, the raw material prices are up, energy cost is starting to going up. And so those are the kind of disturbance that we are seeing in these manufacturing countries. But generally, the consumer markets as of now has been quite resilient. If we speak of US, what we saw in 2022 when the Ukraine war just started, at that point of time, the fuel prices were in this range of what it is today. And that slowed down the market later on. But this time, what we are seeing is that that impact is not there.
All right, good to know about that. But along with that, Mr. Banerjee, you said that Guatemala break-even is actually expected at the start of FY27. What gives you confidence on this, and what factors will be behind this?
So Guatemala is a very high demand kind of country for US, because the goods can be shipped to US within a week, and it can be in the store in a couple of weeks' time. So with that, there's a huge attraction for the US retailers and the brands to buy from Guatemala. But the manufacturing capacity is very limited, and the raw material sourcing is also very, very limited. As a result, it's not an easy country to operate, and we have learned that. We have seen that making break even, it's taking us time. And I think what we are seeing that last year we had a sizable, what we saw is a drain. This year, I think we are almost coming to that, not yet break even, I would say. So that's give us the confidence that next year definitely we should be crossing that mark.
Mr. Banerjee, wanted to get a sense on the FTAs that India has signed with several countries globally. Is it benefiting you? And has that already started reflecting in your numbers, or it is likely to take some more time?
European Union and UK, both these FTAs are the additional FTAs that we have signed as of now, but not yet implemented. But other countries like Japan, Australia, it has been existing for some time. And so there we see that the continuous growth in interest in India. These two countries, UK and European Union, what we are seeing is they are showing interest at this point of time. Most of these customers from UK and European Union were working very heavily in Bangladesh and Cambodia. And now in Vietnam also has become, for them, tariff-free. So Bangladesh and Cambodia was for the LDC status, that's the least development country, developed country status that they had, because of which they were getting that benefit. So the brands and retailers have a very high exposure in these two countries. India signing this FTA is very exciting for them because India is a much more stable economy and a much larger economy to do business with. So that's a positive sign, and they are showing a lot of interest. So there are a lot of queries at this point of time. Just early confirmation is happening because they would like to go slow in the beginning just to try out. And once the implementation is done, then there should be definitely a significant growth.
All right, and we look forward to that. But with this, Mr. Banerjee, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you. Thank you so much.